So last night I came up with the first inventory for the post of liquor.
And
I will have you know that the list is 15% Scotch.
15?
That's
15.
right.
So, okay, if you did all whiskey, what would it be? What's the portfolio
52
allocation? You know what? Sometimes that
because my accounting ass just sat there and went, okay, I'm building a table, so I have a count of everything.
Diversification is good, but if it's going to be all whiskey, I mean, is it really that bad, Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy.
All right, and welcome back to Drunkenomics, the drinking podcast with an economics problem. I want you all to look to the left, look to the right, and check out this guy coming down here, weighing in at 2229, the Vix, which makes me, James Goldwater, less gracious host, still in final form. And across from me, Aaron Wong, weighing in a little less muscular and bulky than he used to with those egg prices where they are.
Gosh.
That is more gracious, Aaron Wong.
You're not kidding, man. I went to the gym earlier today. I was on the bench, and it didn't look good, man. And I think a lot of it was just because I've been priced out of eggs recently.
Did you bench did you press the bench, or did the bench press you?
I don't know. I miss my eggs.
Oh,
I miss my eggs is all I know. Okay.
All I'm gonna say is, look, between the two of us, you need eggs to go to the gym. The only gym I go to is Jim Beam. Frankly, we're halfway to a whiskey sour.
Yes.
So.
Oh, wow. Yeah, I know. All we need is just a little simple syrup and lemon juice. Dry shake, wet shake. There we go.
And if we're feeling fancy, we can float some wine.
Yeah, or some sweet vermouth if the guy that runs the bar didn't forget to order it.
I don't know who that guy is. Almost though.
Yeah, but anyways, so glad you all can join us.
Welcome back.
What's our social media stuff again? I forget. You know, don't you?
Yeah, exactly. It's Drunkenomical, and you're going to need to find us because we're taking next week off.
Yes.
Not from social media, not from just being in here to chat, but we will not be releasing an episode. So we'll see you in March. We're going to try and take quarterly vacations this year for, I want to say mental health, but I'm just going to call them hangover days.
Yeah.
What can I say?
I don't know. Coming on here is my mental health release, like it's...
that's true, but
having a
hangover days too.
That's true, yes.
They're building up.
Yeah, I know. I need a full week for that, so...
Drunkenomical on... in the metaverse, that's Facebook and Instagram, also separately and not related via social media on Twitter. And that is DRUNKENOMICAL.
God, you've been so good at that. That's amazing.
There you can find invites to the Discord, less gracious than ever. You can find the invites to the Discord where you can jump in and where we are going to continue having our awesome conversations. We can interact with other drinkonomists and econoholics. And I don't know, have a good time. Mess with each other, interact with us during it's not an off week, but it's just not an on week. Let's call it that.
Yeah, exactly. I mean, I'm just looking at, I noticed, what's his name? K Nello, as always, in true form, filling in and killing. We have a fill and kill channel.
Absolutely.
Yeah, dude. I mean,
crushing
just
it.
absolutely being
I'm proud of, I'll be honest, I'm proud of so much of the stuff I've seen in there. I have submitted some things that I'm not proud of. So let's be fair. Fireball and milk. I mean, it's just it was better than some things, but boy, it was better. So we'll be trying the Powerball sometime this week.
It's better than some things. The Powerball is better than some things. I don't know why. I don't want to know what those things are.
It's Fernet and Malort.
Oh, okay. Yeah, by themselves.
Sorry, Chicago. Yes. Malort is awful.
I'm sorry. I don't care. No, I'm not sorry about it. Chicago, Malort sucks. I'm. You know what? Come at me. I don't know.
I have one friend from. I think I only have one friend from Chicago, and he's told me that Malort's the joke that Chicago is playing on the rest of the country.
I swear to God,
it's the practical joke.
Okay, yeah, because I feel like every city is like that. I feel like Bostonians, like people from Boston, there's no way you actually talk like that. Yeah. But anyways, so glad you all could join us. Hopefully you have a nice stiff one in front of you, unless of course you're about to drive somewhere. I should also mention that another thing we say is financial advice. Thoughts expressed on this podcast do not reflect the thoughts and views of our employers. If they do, it's completely coincidental.
Nor is it actually financial advice. But that's another thing. This is just we're talking about specific. We may be talking about specifics. We may be talking about generalizations. But it's us just saying, hey, take an eye at this. This is something we find interesting. This is something that's relevant right now. And here's the great thing. If we batted 100, we'd be we wouldn't just be the Charlie Munger and Warren Buffett of podcasts. We'd be the Charlie Munger and
Warren Buffett of real life,
of Lincoln, and
wherever.
I don't know. We'd move somewhere. I think we'd go somewhere and be like, they're like the I don't know, like the
I don't know. You're definitely the Charlie Munger of the two of us for sure. Like you're 100%.
Well, I think you're more amiable, and people. I think people legitimately like you, and I understand that.
Well,
I think Warren seems like he's like he'd be much nicer, and like I don't know. Charlie is just he seems a little salty, and I feel that.
Yeah, I know. Well, I mean, to be fair, I like Charlie better than Warren Buffett. Like if I had to listen to an interview between Charlie Munger and Warren Buffett, I 100% would pick Charlie Munger because like he's so
I loved it.
He's so blunt. He makes the best analogies.
He calls a spade a spade.
Dude, yeah, if there's a spade, it will be called a spade by Charlie Munger, and his analogies are brilliant.
Bullshit earnings.
Yeah, bullshit earnings. Warren Buffett.
Warren's that nice guy. Warren will sugarcoat it a little bit.
Yeah, 100%.
If you,
but like this is the thing. Like so, I mean, the prime example is the 2008. I think we talked about it before on this presentation. Mm-hmm. But 2008, remember when Lehman Brothers was about to go under?
Yeah.
Warren Buffett offered what's his name? The CEO
offered Dick Fuld.
That's
he offered to buy preferred at a pretty preferential rate.
Yeah, I mean, it was actually kind of insulting to Dick Fuld if you think about it, because it was like
Dick was insulted because it was lower than Dick wanted it by a substantial margin.
Yeah, but it's a new issue, so it's not like it's like I mean, what are you complaining about?
It was meant to be
it's a new issue.
Warren doesn't invest it. He doesn't put money into bad things. Like
he calculated some risk, and they needed the cash. So I don't understand why he backed out on it. But
and if
you ask $5 billion for,
well, if you ask Warren very simply,
for preferred, I think it was convertible preferred. Yeah,
it was convertible preferred with, but also if it was a shortened buyback, it was at Warren's discretion. It was at Berkshire's discretion, not at
So a lot of favorable terms for Warren Buffett for sure. But yeah,
but if you need my money now. Yeah, I'm going to loan shark you a little bit. Like,
yeah, of course.
He has a fiduciary responsibility to Berkshire Hathaway.
Yeah, and let's be honest. Like, I mean, at the time, let's not pretend like there weren't going to be liquidity concerns for Lehman Brothers preferred shares. Let's be honest, right?
Well, especially like when you're asking for money like that in that market, it's because of a liquidity concern.
Exactly. But I don't know. I just think I think you're definitely the Charlie Munger. That's all. Long way of us saying that.
Hey, look, I'll take it. Yeah. I'll take it. I appreciate it.
Yeah.
It works perfectly because I'm a little older than you. Charlie's a little older than Warren, and
you're a lot funnier.
And if I don't know about that, but I mean, I'll call bullshit. I'll call dingo. I don't know. Speaking of Charlie. He's had a wild week.
I know.
Not necessarily wild.
He's
just doubled down.
Well, what was that thing that happened last week? Because that wasn't the annual meeting, or wasn't there like a annual meeting or a quarterly meeting or something like that Berkshire Hathaway did, and then that's when he kind of really stomped the foot on the neck of crypto even more.
I don't know. Well, let's put it this way: was it at a? Yeah, it was the annual shareholders meeting.
But
of the Daily Journal Corporation. Yeah. So it wasn't Berkshire, because Berkshire's is later in the year.
Yeah, it's usually like in the summer. Yeah,
I want to say June, but it's because apparently they go to the zoo.
Yeah, well, it's got to be nicer out. Like, who wants to go to Omaha in February? You know what I mean? No offense to Omahanians.
I'll say this: Omaha and Lincoln this week are substantially better than anywhere north of here. So if you're so for those of our listeners, if you're in the Minneapolis area, the Dakotas, good luck, guys. I heard about. That's all I can say. Stay warm.
I woke up to the news article of 10,000, not 10,000. That's way drastic. 1,000 canceled flights today because of the snow.
Yeah, well, Minneapolis, St. Paul is a major travel hub.
Yeah, MSP.
Chicago O'Hare isn't exactly.
What? It's only in the middle of the country.
Is that one of the biggest airports in the world? I know, weird, right?
Yeah,
but 1,000 flights, not great for the airlines. Oh well, but you say he stamped on the throat of crypto. I say he doubled down on his original position, which is that it's all bullshit.
Right.
And
he
referred to crypto as massively stupid.
I think if you watch the interview, he decided to go into much more specific. I'll say specific is the way I'll describe it. He used much more specific language.
He said it's ridiculous that anyone would buy this massively stupid stuff.
Yes,
and it gets worse.
Stuff. Yeah,
and then he elucidates on those points. It's not.
Well, yeah, but
it's a valid point.
It's a really valid point because, like, I think if you're really trying to find inflation protection, like, do you really think crypto? I personally don't think so.
If you're playing a game, look, I view it as you're playing a game of hot potato. Mm-hmm. Except you can't even eat the hot potato if you're forced to hold it.
Right.
Like it's. Let's be fair. A lot of people who are in crypto. Or a lot of people who bought into crypto, they need to see a valuation increase by $30,000 before they can sell.
Yeah, half the people.
At a break-even point.
Yeah.
And that's ignoring inflation.
Right.
So
it's ignoring inflation. And, I know a lot of finance geeks are like, oh, time value of money, discounted by 1 plus R or to the T power, right? Or whatever it is. It's like
quantity 1 plus R to the T power over periods, number of periods.
Yeah,
right?
number of periods. It also just depends on, like the frequency,
of the payment. How you're
But I mean, whatever.
Exactly.
Yeah, but I mean, anyways, we don't have to go down that rabbit hole. But no, yeah, that's exactly what it is, right? Like, it's an excellent trading tool. Like, I think it really is a great.
It's a great game of baccarat. It's a great game of roulette.
But I think people that actually think that it's going to be a currency, like the number one thing I think, if for Bitcoin to actually become a currency, it needs to trade like a currency. Like, it can't lose 20% of your value in a single day, or like in the next 5 minutes, really, right? Like
the real problem it has when it comes as we've discussed in previous episodes, it fails every test of currency, of money. It fails every test for money. But the reason it fails every test for money is that it has no backing. So like every other currency in the world is backed by a central bank. What that really means is it's actually backed by the receipts and natural resources, the tax receipts and the natural resources of the country of origin, right? So I know in the end, there's a working economy there.
Yeah, but I love how Bitcoiners like to argue that, okay, it's still like technically the taxpayers, it's backed by nothing. I'm like, no, there's something substantial there, right?
No.
When you have a country I work, everybody works. When you have a country with a GDP of 25 trillion.
My labor has value. Things I consume have value. Money is the medium of exchange. It is just a token. Like, what was they said in Margin Call? Which is, again, that's the movie, the podcast, guys. But Margin Call, I think Jeremy Irons just says money. I've met people who've been killing each other for it for years. But at one point, there's a conversation where he goes, it's just money. It's made up. It's something we invented so we didn't have to kill each other when we wanted something. Yeah. We wanted to trade something.
Well, I think what he specifically said was like kill each other to find something to eat or something like that. Or I forget, right? Or to get some food.
To kill each other for something to eat.
Yeah.
It's something like that. It's that, but it's that. It's accurate.
No, that's exactly what it is. Right.
Whereas crypto, let's put it this way: if I were to pay for something with crypto, it would be because I received free crypto. Someone else is willing to sell me something for that
thing.
Like, all right.
And normally speaking, like there's such
whether it be someone sells me their currency.
Yeah, but the thing is, like, it's exactly that. I would honestly take that deal any day of the week. But I really like, if you think about it, like even if you were to use crypto as a thing of exchange, as a unit of exchange. Like people have
exchange,
medium of exchange, medium, whatever.
Unit of
exchange.
Unit of measurement, medium of exchange.
Oh, okay, yeah, that makes sense. Okay, so medium of exchange. Like I know a lot of retail stores have tried to do that, but they're just like, for $125 suit, 2-piece suit combo, we have to charge $600 worth of Bitcoin because because 5 minutes from now, that $600 worth of Bitcoin can easily become $125 worth of Bitcoin. So that's why we have to charge that much. That's the quote unquote like currency risk I'm talking about with with Bitcoin and with cryptocurrencies. That's why I just don't. I don't want to ruin. Like I feel like there's going to be a lot of crypto people after hearing everything we just said. They're going to be like, "Yo, come on." This is what crypto is actually going to do. This is going to pass, and once this passes, there's going to be stability, and it's going to start trading like an actual.
To me, that destroys one of the big premises of crypto, which is like a lot of crypto say like, oh, it's unregulated, it's not, the government doesn't have anything to do with it, and so it's anonymous. Yeah. And my response is, if you want that stability and that lack of concern about whether or not it's a going concern, right? So in business, accounting specifically, we use this going concern argument, which is to say, if the business looks like it may not be a going concern any longer, that's a big red flag. So going concern, everything's fine. It will continue, your business will continue to be open. But when you run into going concern, it becomes a going concern problem, like, or there's an issue with whether or not it's still a going concern, that means the business is about to fail for something. Yeah. But if it's regulated by the government, then you've just lost you're no longer regulated. So it's like, well, why? Yeah.
The decentralization premise of crypto that makes it attractive to people from the outside
for specific purposes, for certain purposes.
Now that's not there. But also, like I think Bitcoin, and I know like a lot of people are like, oh, well, if you look at any currency pair, if you look at the a GBP USD, like that's extremely volatile. But it's like, yeah, it's volatile, but it's volatile like on a band, right? Like it always settles back to a certain point. And as far as the volatility goes, it's not like 5% every 2 minutes. It doesn't fluctuate 5% every 2 minutes.
No, it might take decades, or it might take months.
Yeah.
It's a glacial process. It is a much more gradual process.
Yeah. Whereas like cryptocurrency, it's like, okay, well, a month later,
it's a flash of lightning.
A month later, I don't know what it's at right now, but a month later, it could very easily be back to 60,000. I don't think it will, but I'm saying it could very easily be, because of some guy's tweet or whatever it is, right? Like it could literally do that.
Wonder who that guy could or could not be.
Yeah. I mean,
Bitcoin's down at $24,000 right now. It's down at approximately, lazy math, a third of its value from 3 years ago?
Yeah.
2 years ago?
Well, the thing is, so early January, it was at 18,000 or something like that. So it literally, it went.
So it's
up
appreciated by 30%.
30%. So it's like, dude, honestly, if you bought it at 30% ago and now it's 30% up, congratulations.
Doing great.
Yeah.
Well, once you've sold it and realized that.
Yeah. I'm not saying sell, but I'm just saying it's so weird how it fluctuates that much. No two currencies really do that without at least snapping back to whatever it was.
Not without a huge external reason. So sanctions.
Sanctions.
Someone's bombed the shit out of the eastern part of your country and invaded 3 of your provinces, Ukraine. Right.
Yes.
Your currencies are going to show some reaction to that. Your country splits in two: Sudan and South Sudan.
Yeah.
Egypt. Some idiot boat pilot lets the boat get stuck in the canal. Right. Let's be fair.
There you go. That's a huge one. Or it could just be something like, okay, Apple decides they want to move their headquarters to France. I'm not saying that's going to happen, but if they did, obviously
it would not be in their it would not be in their tax interest to do so.
No, it wouldn't.
I'll say that.
I know, but I just made up example. If Apple did do that, obviously the appetite for the euro would definitely go up, right? So if something like that happens, currencies they'll find a new normal or a new whatever, right? Something like that.
It'll settle in a new place. It's
that's I think we talked enough about Bitcoin. I don't know how we got down that rabbit hole. I love Charlie Munger so much.
I think it's Charlie Munger. Man,
I thought I had way more turkey than that.
Oh no.
Yeah, I gotta dip back into the scotch after this one, huh?
Yeah, I'll be honest. Here's the critical thing. One thing I did not forget: turkey and turkey rye.
Oh, for the post?
Definitely had those on the list.
Oh yeah, you can't forget that.
Oh,
turkey rye is so underrated.
Yeah.
Anyways, I don't know. I do want to talk about this question. Did you see that question in Discord about something about credit card defaults? We answered a question about.
I did see the question.
Yeah, it was in reference to our episode, our presentation last week, and he was like, "Love the show. Wouldn't that make credit card defaults decline rather than increase? It seems very irresponsible, but the analogy that bungee cords were pretty good."
Oh yeah, I appreciate the fact that you love my analogy.
Yeah, I think he was talking about
the Great Jobs Report.
Yeah. Which I think, yes, right. If you just look at it for face value, all else held constant, yes, it would definitely make credit card defaults decline.
It should.
Yes, or it should.
You'd expect increased employment to lead to a decrease in credit default.
Yeah,
you would expect that. They would have a positive correlation.
Yeah, but if you look at what's going on right now, inflation has gone up, which means the cost of pretty much everything has gone up, which means credit card debt balances have gone up, and additionally, interest rates on that debt that compounds pretty frequently because it's a credit card loan. All that has gone up drastically. The growth of that has really outpaced the growth of wages. It's outpaced the growth of really a strong labor market really can't keep up with that, unfortunately. Which I think
it could, but it isn't presently. The real issue is that it's not. Let's look back. So what we really have to do is we have to go back 6 months, I want to say, maybe 9 months. But there was an episode where we were talking about it, and it was in the summer fall of 2023, so 2022. What we saw was a huge increase in the amount of buy now, pay later credit being used to buy necessity products. So not like a TV, not a gaming console, a computer, but buying eggs. People were buying eggs. People were buying milk. So 9 months ago,
so sad.
6 to 9 months ago, people were starting to buy before the current inflationary pressures were really hitting in the way they are on staple survival products. Yeah. People were already tapping new credit sources and I'll be honest, a little, shall we say, subprime rates for credit.
Nice.
Right?
Nice.
So people are borrowing
much more sexy word, yes.
That long ago. So the question you're asking, or the question that's being asked is why hasn't this jobs report in January? It's because, great jobs report in January. It really was.
Fantastic,
I mean,
yeah.
but a great jobs report in 1 month can't undo 6, 7, 8 months of bad job reports, can't undo 6, 7, 8 months of inflationary pressure on staple survival goods.
Yeah.
That's why, like we talked about last week and the week before and the week before and last year, what's the point in looking at the inflation basket and excluding food and energy and housing? It's like, oh, okay, why would we exclude the things that I have to survive?
Yeah.
Cool. I don't care about used cars. I don't have to buy one of those.
I don't buy
I do
one
have
a month.
to buy at some point food.
Yeah.
I have to pay in Nebraska for heat.
I have
at
to pay
some
for
point,
rent.
and cooling at another. I have to pay for rent. I have to pay for at least water. Right. So when you say like, oh, well, excluding all the things necessary for survival, inflation's down. It's like, well what?
Well, I wonder, like, why isn't there like an actual basket of goods that just includes the necessities like food, energy, rent, right?
Do you want the really cynical answer?
Yes.
The cynical answer for why there's no basket of goods, like why there's no specifically published by the government basket of goods that does that, is the same reason they don't raise the poverty line all that often. No government wants to be the government that increases the number of people in poverty.
No, yeah, so that makes sense. Like if all of a sudden, you're the guy in charge, and then food, energy, rent prices double during your time in charge.
It's
it might
really
not be your
hard
fault.
to.
I think you're right, because I think you've mentioned, this is. I don't think inflation's going down, and even if inflation does go down, prices aren't going to go down. There's not going to be any deflation. So
we see, like we said, when we talked to Bob on Bob on unaired episode on the unaired episode due to technical issues.
Yeah,
swear to God.
Yeah, swear to God.
The only places where we see deflation that are positive is we see deflation in oil. The cost of historically in the cost of computing power. Little less true of the last few years, but it'll go back to that kind of downward trend where we get better processing out of. And then also, things like you see it to an extent in certain medicines once they go generic, right? You see deflation in the cost to treat certain illnesses but as a whole, you're right. We do not see deflation in the vast majority of things.
Yeah, but like I think certain commodities do. Like if you look at corn or oil, like there's going to be deflationary periods that are very, very cyclical with those, in relation to.
Oh yeah, but that you see, that's where you have overproduction, underconsumption.
Yeah, but it's not.
Right? And eventually, supply and demand will meet, and then they'll go, and then but it doesn't
always like revolve back to like the same exact level, right? Like because honestly, like if you think about a bushel of corn or whatever unit it is, I don't know.
It is a bushel.
Yeah. Okay. Thanks. Cool. Awesome. But a bushel of corn, like in the 50s, is certainly a lot cheaper than a bushel of corn now, right? So eventually, like every time it resets, it's always a little bit higher than what it was before. That's going to happen with oil. It's going to happen with eggs, unfortunately.
With any good, what you see is that prices increase, prices go up. It's inflation, and inflation. Here's the funny thing: inflation's not bad.
No, it's not inherently
inflation's
bad. Really just a sign.
In fact, inflation is good.
Too much is okay.
Controlled inflation is good.
Yeah, I mean,
controlled growth is good. Uncontrolled growth is cancer.
Yeah, when it starts getting bad is when it gets into hyperinflation or stagflation. That's when it starts becoming a big problem. But to your point, like inflation is really a sign of a growing economy. People are outbidding each other for the same good. Right, so
people are willing to pay more for the same good.
Yeah, in order for that to
happen,
happen,
to pay more when you have more.
Yeah, exactly. In order for that to happen, you have to have the means to do it, or you have to have the borrowing power to have the means to do it. So,
with the bungee cords, that's the bungee cord. There's only so much length.
Right.
There's only so much length before the strength brings you back. I guess to bounce back to that question, pun intended. Why doesn't that suggest?
Nope.
I think I talked about it. We've seen people borrowing more to buy the regular goods. We've seen people. We've seen the cost of everything really under the sun going up.
Yeah.
And so that's why we're seeing like defaults increasing. And the next problem is on top of that inflationary pressure devaluing your money.
Right.
You also having that increased interest rate, which means that the cost you're paying to pay off what you've borrowed historically. I want to say it's Warren Buffett said, "Nothing in the world is so powerful as compound interest."
Yeah, that's literally a direct quote from Warren Buffett.
So if nothing in the world is so powerful as compound interest, increasing interest rates makes that compound interest just that much more powerful.
And I think it kind of goes into this whole interest rate increase goes into one of the big topics that we see in financial news, which is I think a lot of people have been talking about the yield curve. I mean, you've seen it. Like it's been inverted
for a minute.
For a very long minute. And I even asked some strategists, like I asked the strategist of Market Rebellion. I was like, dude, like what are the odds we can avoid a crash landing? Because his words particularly, and this is AJ Monty, who I think is brilliant. I love his content.
I really like him.
Yeah,
I love his stuff.
Yeah, AJ Monty is brilliant. So he's the chief, I think.
I'll be honest. The guy, I don't know of anyone at Market Rebellion that isn't.
That's true. That's a good point.
Really at the top of their game.
Yeah, exactly. Market Rebellion
it's a pretty smart shop.
Yeah, they're excellent.
And to be fair, we're not just saying that because
we know
some of the guys.
Yeah, we know some of the guys. But like, it's seriously a brilliant shop. But AJ Monty is absolutely, his content, his YouTube channel is freaking awesome.
Quality.
Yeah, but I asked him like, what are they? Because I thought and I still think this, even though I think AJ Monty disagrees, but I really think that we can avoid a crash landing, to use his words, if China stays open, everything goes back to business as usual. But he's saying the yield curve, his yield curve argument, which is tough to disagree with. It really is. Mm-hmm. When a yield curve has been inverted for this long, it's really tough to say like, hey, we don't think there's going to be
a recession.
On
the other side of it. Yeah,
I want to bring this up because I do think the front. If you look at the front of the yield curve all the time, it's usually always like what makes the front end of the yield curve go up. And it's really just interest rates. It's not really
almost always.
It's not. Yeah, it's not really people buying the hell out of short-term bonds. That's really not that. It's just a coupon.
Like people, you do, but most of the time, people that buy into that short-term rate, it's usually to cushion a portfolio, and it's like, look, we'll do 30-day bonds, and we'll cycle through every 30 days. We just we take take the 7 cents or whatever.
Well, now it's like, okay, yeah, like if you buy a less than 1 year bond, odds are you're probably getting more than 4% yield, which it's like, dude, like how, like that looks so attractive.
Which and here's the wild thing. Do you know the only thing keeping the yield from the yield curve from being even worse is the fact that no new bonds have been issued in the last 30 days. No new treasuries. Wow. Debt ceiling, no new treasuries.
No new issues.
Imagine if it was business as usual right now at the current coupon rate.
Oh wow, that would be
at the current overnight rate. In some extremely perverse ways, hitting the debt ceiling is
very perverse. Yeah. Well, think about what happened in the last 30 days.
Is helping us avoid the true problem at hand.
Well, even if you think about like what happened in the last 30 days, right? So the debt ceiling got suspended, or not suspended, but there's been no new issues, and that's within the last 30 days. We also in the last 30 days had a rate hike, right? So with the rate hike, the government hasn't been able to issue new loans at the new rates,
right? So that keeps the yield low, keeps the front end of the yield curve a little lower than it should be under purely market conditions.
Right, and I'll be honest with you, like if I had to weigh default risk, because I think default risk, it's easier to manage with a longer term bond, right? Because like the par isn't getting paid out for a long time, so you can manage to avoid default on a coupon payment much more easily than you can avoid default on
the principal.
Exactly. So on the actual face value.
Yeah.
Absolutely. So that's why I also think
it's a hell of a lot easier for me to pay you $50 than
to pay you $1,000. Yeah. Plus, not to mention, usually on
especially especially on short notice.
Yeah, well, and on maturation dates, usually there's another coupon payment with it too. So it's usually like if it's a 5% coupon bond,
it's either another coupon, or if it's a 30-day bond, the only coupon.
Well, it's like if it's a 5% bond, $1,000 face value on maturity day, it's $1,050, right? That's the cash flow coming in for you, right? And of course, you want to discount it to present value, right? Whatever.
I don't see. Here's $1,048.50. And that's in a weak economy.
Yeah. Well,
30 days.
Well, this is the thing is like I think it's easier to manage that. So I think default risk, I don't know what the heaviest default risk lies on. Like I don't know which part of the curve. I'm guessing maybe the 2 year, but that's a pure guess. It could be the 5, it could be the 7.
For me, I'd say the highest risk of default. Okay, I'll just say anything maturing between July and September of 2023 right now. Doesn't matter when it was issued.
When it's issued, as long as the term is up.
Whatever those historical, if your maturity date is in that period, that's where the risk lies. And I say that only based on the fact that Treasury has said that that's when.
Right.
That's when it happens. That's when default happens.
Right. So I guess in terms of the debt ceiling, the real way it's really affecting the yield curve, I think, is just
So I guess
new issues.
any 6 months out of December would be
Right.
suspect.
Okay, so that makes sense. I think I'm starting to piece it together a little bit, right? Like, I think the debt ceiling, us coming up with the debt ceiling, I think it's really it's kind of frozen the yield curve a little bit, not necessarily in a good way.
It's suppressed it. There's a body under the ice.
Yeah, exactly. But especially on the front end, right? Which I don't really know what the back end of the curve is doing. I really haven't looked at the 10-year in a long time, but it looks like the 10-year was up today. So if the front end of the curve is still stagnant, well, there you go. The answer to that question is that the yield curve has flattened a little bit. But then again, a lot of times whenever there is an economic contraction, people don't necessarily sell their bonds. When I say don't sell their bonds, I mean don't sell their government bonds during times of economic contraction.
No.
Right? Like
I trust the government to be here.
10
Maybe
years
not
from now.
This specific government, so it may not be the Biden administration.
Well, no.
It will not, but
the U.S.
in 2 years
government,
it will not be the currently sitting Congress, but I expect the United States government to still be here.
Because like whenever there is like an economic contraction, what do investors do? They flee towards quality. Is there more quality than the U.S. government, right? This U.S. government is the epitome of quality. It has never defaulted, right? Unlike other companies. So
other companies, that's fair.
Yeah. Well, that's what I'm saying. That's what I'm saying. Like,
United States is one of a small number never defaulted. Yes.
Yeah, it's small. Yeah. But that's what I'm saying. Like, the reason why the yield curve really inverts is because the front end of the curve really gets affected by interest rate hikes. The back end of the curve does a little bit as well. Are people actually selling the 10-year bond? I don't necessarily think so. I think if anything, people are buying it, but I think people are buying more closer to the front end because
the front end's paying out much better on the coupon rate than the long term. But the long term has much more guarantee of paying out the face value. So it's
right. So that's what I mean. That's what I meant. So I meant to say
that game of musical chairs. A game of chicken for the coupon payments.
Right, so that's what I'm saying. Like,
and whether or not you think that the government...
Yeah, I actually meant to say that people are buying more towards the back end because of that. Right, that's what I meant to say. Which is why there is an inversion. There is an inversion as steep as it is because one, interest rates have gone up, and then two, there is some concern of maybe a default in the short term. Well, right.
It's not. And the great thing is, it's not even a solvency question. Like we know the United States is solvent.
Yeah.
It gets to print its own money. Anyone that can print their own money is solvent.
I just think yield curve is something we really have to pay attention to.
Absolutely.
I mean, I don't know. Like, I feel like this year, I'm trying to figure out what the theme for this year is going to be because last year was the Fed. This year is still the Fed, but it's China and it's also the yield. I think now we're going to throw in the yield curve. Now we're going to throw in the labor market.
I'll say yield curve. Here's what I'll say. So this year is going to be defined by 3 things.
Okay.
I think.
Let's hear it.
For the fourth one being kind of started last year, so this year's not going to be defined by it unless it ends. Right. So the first thing, the U.S. debt ceiling.
Oh,
it has to be addressed.
That's a great one. Yeah.
That's one. If it's addressed, it's a non-issue. If it's not addressed, it is the cataclysmic issue of our time.
Yes.
And that's not I don't think that's an overstatement.
Not anymore. Yes.
2, inflation. Is it tamed on consumer goods? Actual staples, on the staple goods, housing, energy, food.
Okay.
Has to be addressed. So that's 2, inflation there, real inflation there.
But I still think, so inflation is really a byproduct of the Fed.
Well,
anymore.
3, is the Fed serious about taming inflation? Right? So it's inflation 1, because inflation isn't driven by the Fed.
No, not entirely.
It can be constrained by the Fed.
Yeah, you could put shackles on inflation, but it still does what it wants to do, just a little bit more limited and not as quick.
Yeah. Right? So on 1, it's the beast of inflation. What is it going to do? And then 3, can the Fed tame inflation? And then 4 would be Russia, Ukraine. How does that end?
Yeah.
Does it end this year? If it doesn't end this year, it's a non-issue for this year, and if it does end this year, how does it end this year?
Well, I like the 3.5.
The fourth one is is that italicized It's all, is it, if it does, it is, if it doesn't, it isn't. Well, but those are my 3 for this year.
Well, I like the 3.5 that you have. I really like it. And I like your market outlook.
Thank you. For me, the big one though is looking at the Fed and Fed interest rates and everything else and the debt ceiling. So 2 and 3. For me, the big one is going to be how do foreign central banks react to 2 and 3 with treasuries if and when they're being issued?
Yeah. So I mean, this year, kind of to your point, it's kind of almost, my market outlook is almost the same as yours, but just kind of comes at it from a different angle, right? So there's the Fed, right, which is the same as your inflation story. The debt ceiling, I really like. That wasn't originally in my personal market outlook, but it is now.
I think it has to, because it's the...
Yeah, because I think now it's a little bit more severe. Now it's actually more realistic of the odds of a default are more realistic than ever.
Yeah.
I still don't think it's going to happen, though. So that's why I don't really want to include that in my market outlook.
I agree with you optimistically, but
Fair
no
enough.
House Speaker took more than one vote in the last... Kevin McCarthy's the first speaker to not win on his first ballot.
14,
in my
15
lifetime.
times.
In obviously also your lifetime. Hell,
Yes.
in our combined... If you were to do the sum of our ages in
When
our
was the
combined
last? When was the
lifetimes.
last time that happened?
I want to say it was 60 years ago?
Yeah, so
maybe not.
Obviously, it's been a minute, but so I'll include the debt ceiling, but I don't want that as one of my main topics. I still think it's China. I kind of want to say gold, but instead of saying gold, I kind of say the dollar. I'll say the U.S. dollar, just to kind of under the umbrella of the U.S. dollar story. There's gold and the value of gold, the global appetite for gold, because the dollar might weaken quite a bit this year, right? Just a possibility. And then of course, did I see China already? China's my big story. China's like, we got to keep an eye on China. If they invade Taiwan, which I don't think they will, but
that's part of 3.5 for me.
Yeah. So, this is the thing is, so if China does invade Taiwan, I don't think the world is gonna silo China the way they siloed Russia. Like they really, there's no way. Like that would be so catastrophic for the entire world and for hundreds of millions of people, within China, if they just sanction everything, cut off everything. If everybody cut off everything to China, that would be catastrophic for the entire world.
Well, sanctions are always bad for someone.
Yeah, but like, but
I hate to be glib. I hate to laugh about that. But,
no, 100%. No, I 100% agree with you. And there is a shy chuckle, coming from me, a nervous chuckle. But I think so. If we treat China like Russia after they invaded Ukraine, that's just,
it wouldn't.
Like,
I don't think it would be treated that way.
China buys so much stuff from everybody. They make so much stuff for everybody, and they sell so much stuff for everybody to everybody. So
they buy a lot of raw materials that they put into strategic raw material reserves. Mm-hmm. So on one hand, they're a great customer. They're always buying. To be fair, so is the U.S. a great customer. We're always buying.
We're the best customer. They might be the second best customer in the world.
They are. So, now, they're always buying raw materials. Now,
yeah, I mean, like, let's be honest. It's the U.S. is the best customer in the world, 50 feet of crap, and then China, and then the rest of the world is right there, right?
You want to sell to the U.S. If you can't sell to the U.S., you'll sell to China because China's buying. They're hungry. Now, if you're Australia, you're actually upset with them right now, so you're more than happy to sell to Brazil and the U.S. and everywhere else. What I'll say is this, and this is my view on the strategic ambiguity and economics of Taiwan, and it's that if Beijing sets one foot in malice on Taiwanese soil, that is World War III.
Yeah, probably.
That's personal opinion. That's personal opinion.
I think so too. But I'm saying, like, if it's not World War III, like I'm saying, if we treat it like Russia, Ukraine, if we treat which I don't think we will, but if we did, because I think
well, then we're going to have a lot of Navy SEALs and Green Berets spending time in Taiwan.
Yeah, well, I think
it will not be, the U.S. will not be hands off about things.
No. I think what's going to happen. So, like, if they do set one foot in malice into Taiwan, which I love that terminology, by the way. So thanks for saying that. But if they do that, I don't think the entire world's going to jump in right away. Because I think we're going to do everything we can to avoid World War III and all of the UN and NATO's moral superiority. Like in their moral superiority on their high horse, they're going to try to do everything they can.
Horse.
Yeah, they're going to try to do everything to avoid it. So I think they're not going to do anything like it. But I think they're going to do they're going to be like I don't know. They're going to be instigators, right? So they're going to put things around for China to knock down, and as soon as China knocks one of those things down, it's like, oh, that's cause for war, right? I think that's what they're going to do.
Well, and so that's the reason that the U.S. is approaching such strong deals with the Philippines, especially in military. Basically, we want to reopen some of our military bases in the Philippines, some of our naval bases.
We put like a million carriers.
Stations.
How many carriers did we put in the South China Sea? Was it 4? I think we saw 4 carriers in the South China Sea.
We saw a few sail through.
4 U.S. carriers. I think they're still parked there.
That's
I don't
40,
know if they are.
Well, they're not parked there. They move around a little bit. That's 40% of the carrier fleet. The United States has 10 super carriers, 3 of which are refueling at any given time, and 7 of which are active in combat zones or active around the world. how does that go?
Well, there was 4 of them not too long ago. I don't know if all 4 of them are still there. But
they'll sail through. They'll do freedom of navigation exercises, just sail right through international waters because it's international rules. There's a reason the United States has been pursuing close relations with Vietnam, who do not want China impressing into their economic zone. With the Philippines for the same reason. Japan, South Korea. Is it a foregone conclusion? No. But I would say that there is a reason China has not given lethal aid to Russia, and that China is observing everything that happens with Ukraine. And they are observing it through the lens of Russia, Ukraine, Beijing, Taiwan.
Yeah.
Having said that, Ukraine has only had 7 years of Western military training and help.
Yeah.
Taiwan has had the better part of several decades.
Yeah.
So
what was this? It was like the 60s, something like that? I mean...
Yeah, so the idea that if 7 years can turn... Now, the Russian military apparatus is clearly corrupt and broken. It's incapable of waging a modern war.
Clearly.
But China is looking at Western resolve, at the way that the world is reacting.
Well, and I'll be honest with you,
that's why, look, you're seeing companies like Kyocera withdrawing their business from China, from mainland. They're going to
way too much geopolitical risk.
They're going to keep production for China in China, but any other production they're moving overseas because of U.S. sanctions.
Yeah, but I still think U.S. sanctions in China, it's not going to happen. Even if there was a World War III, I still don't think it's going to happen, because I think, like, if there was a World War III, I think what honestly the entire world would do would be like, okay, we're going to go into China, we're going to force a regime change. You know, what's the point of sanctioning, right?
Well, there's this great old Roman saying, it's the sinews of war, infinite money. So first you cripple the economy. And does China have the ability to cripple the U.S. economy? Yes. In
Absolutely.
theory, they could dump every bit of U.S. debt onto the market at once, thus devaluing the debt, thus crushing it. But at the same time, okay, China, then who are you selling to? Because you're gonna kill your customer. Okay.
Yeah, well, I mean, it took forever to unload that position, anyways, of that size, and
it would unless you're trying to destroy a market. And here's the great thing: the second you're trying to destroy a market, I could tell you whatever the sitting U.S. president would do is I'd close markets. I would close markets because as of now, someone is attempting to weaponize this.
Yeah, but even then, like, I still think, okay, so if China all of a sudden, if they decide to dump U.S. debt onto the markets, I still think, believe it or not, I still think there would be a buyer. So I think that plan will really backfire in China.
Oh yeah, there's a buyer. Well, always be a buyer. It depends on the price.
Because, like, if you think about, like, you know, how much U.S. debt do they actually have? I mean, it's got to be about $1 trillion, right?
Yeah. I'm just gonna Google it.
Okay. I think it's about. I really think it's between 1 to 1.5 trillion.
It's about 1.1.
Oh,
so
okay.
1.1 of the public debt.
So I guess
1.095 trillion.
Okay, so I was really
absolutely.
I was all over.
I'll be honest, Aaron. On the fucking money.
Thank you.
That sounds like that's a lot of fucking grace from you, my guy.
I know. Gosh, man, I don't know how I like the graciousness, though, to be honest with you. But I mean, I really think, okay, so $1 trillion, there's going to be a buyer of $1 trillion worth of U.S. government debt. Like, there will be. You know,
at the same time, we're seeing the Bank of Japan is buying certain amounts of debt. They're breaching their own. I think they have yield rules.
Yeah, but I don't know. I don't know if Japan's balance sheet, if their central bank, the BOJ's balance sheet is as ugly as the U.S. Federal Reserve's balance sheet.
No,
I don't know that it is. I'm just going to look it up.
I am. That's what I'm doing.
I'm actually pulling it up right here. I take that back. The Japanese central bank, Bank of Japan balance sheet is also very ugly.
Yeah,
I don't know if it's as ugly as the Fed balance sheet, but it's pretty ugly.
Bank of Japan has some serious problems. Japan has some economic problems, which is aside from they have demographic issues, an aging population. They've got
the entire world has an aging population
negative
issue.
interest rates at times because they want people to spend money and consume, but things are so expensive people can't consume or won't.
Yeah.
In Japan, you're not going to see a drop in efficiency. You're just going to see a drop in consumption. In China, you will see that drop in efficiency because suddenly there aren't people working and there are a lot of people laying down.
Yeah.
As you cannot Google in mainland China, the phrase laying down.
Yeah, that kind of laying down. Yeah. But I don't know. I think Japan's going to be an interesting issue too, just because
I think Japan. I think Japan, and especially the Bank of Japan's actions and its appetite for U.S. securities, i.e., interest inflation, right, 2 and 3 for me. The appetite of Japan for U.S. securities is going to be. I think it will be different than has historically been the case, but I think it will be quite critical. Which the Bank of Japan's appetite will be a function of inflation and interest. So it will be the outcome of internal U.S. issues. Having said that, and in realization of a very, very simple fact, and it's that, Aaron, have we been doing this for 3 years now?
Oh, shoot. I think we are on our 3-year anniversary, man. Holy cow.
We are.
220 was
approximately our 3-year anniversary.
Yeah, 220 was when we really first started, which is right before COVID.
And so, in lieu of our historical joke, I will present an ahistorical joke.
Oh, God.
Guys, I hope we've kept you interested.
I hope Are you interested? Are you still interested? That's
exactly.
Episode number
I
1.
Hope we've kept you interested.
Well, I mean, when we first started, we recorded that first episode in January, or maybe even in December of the previous. I forget when we recorded, but it took me like a month to edit. It was
mid to late January.
Yeah, it took me like a month.
2020. It was a simpler time.
Much simpler.
It was in January because it was 2 weeks before I did the math on Chinese steel shutting down. And then that's when I went, Aaron, because I remember I said to you, Aaron, I swear to God that, and if you listen back to our early episodes, if we'd known then, we would have been slightly more tactful, obviously.
Yes, obviously.
But it started as a funny joke. Then we did the math on the economic output of steel just based on the coronavirus in China. And we were like, oh, holy shit, this is a big thing economically.
Yeah, exactly. This is a big percentage of the entire global steel supply.
I think my math said at the time was 52%.
Yeah.
Or 48%. It was
so
close to half.
Yeah.
It was so close to half that it was it's one of those things where it's like if 10%'s an issue, 50% is a problem.
Yeah, exactly. So I can't believe we've been doing this for that long. It's crazy.
And it's been 3 years.
Yeah,
so what I'll say to close this episode, like I said, with the anti-joke at the very end.
I hope you're still interested.
We hope you're still interested. Thank you for still being with us, for being with us for 3 years, for those of you that have been, and for being us for as long as you have, for those that haven't.
Yeah.
And then obviously the shameless plug for merch comes now, which is check out the new really cool stuff at drunkonomics.myspreadshop.com.
Yeah, of course.
Where
seriously,
I've kept the old stuff up. We have the new stuff up.
Yeah, and seriously,
everything helps, and
it's so appreciated. And like honestly, just the fact that you guys are listening, drinking with us, is really appreciated.
And and tweeting at us, Discording with us, all of it. It's really cool.
Instagram DMs, I love it all. Like send us a DM anytime.
Absolutely. I'm not always the best at getting back to you. I read it and then I'll be honest. My big problem is I read it and I either very glibly respond to you,
or you respond in your head,
or I start to think about it real hard and forget that I haven't responded.
And then you have ADD, and you're like, oh man, I forgot I gotta go walk Cora. I'll go walk my dog and then come back. Yeah, I'll go walk my dog and then come back, and then next thing you know, the TV's on.
Yeah, and that is on me.
Don't put too hard on yourself.
But we're glad you're here. We're glad you've been with us. It's been a fun wild ride for 3 years.
It really has.
I'll be honest. Let's just go with a simple. Let's hope for 3 more. And and then we'll reevaluate.
Yeah, and then you know what? Like while we're letting this play out, as we take the next week off, hopefully I encourage you guys to please continue to fill and kill.
Absolutely.
Continue to play chess, not checkers.
It's not gonna kill itself.
Exactly. Somebody's got to do it, like Canelo is, right? And continue to play chess, not checkers. And of course, most importantly, please do that one thing. What's that called?
I'll be honest. I don't know how long you've been doing it, but I know some of us have been doing it for at least 3 years. But stay drunkonomical, guys.
Yes. There you go. Love you all. Cheers.